Good morning, traders. We are Wednesday, 27th of August, 2025. Welcome to another Flow Show with Cayman as your host. Ryan will be off for the rest of the week. Will be back with us next week. Before we dive into everything that happened overnight and yesterday, just a reminder that you can still enjoy a cool discount, 40% discount on your monthly subscriptions to our ForexAnalytix platform. The discount is not going to last forever, so this is probably the last days or week and a half that you can enjoy this one. So no time to waste to come and join us. You can still also enlist here, put your name and email address if you haven't done yet to get our newsletter with a lot of insight on what's going to happen. Us moving from Forex Analytics into trading analytics. You will also be enlisted for a sweepstake where you can win one of our trader funding programs. Sorry. By the way, there's still a Labor Day trader funding program discount running for those who have an interest in running that or in taking the assessment or going for straight away into being in that trader funding program. You can go onto our website. Let me just try and find that link if I find it again, and then you can join via. I'm going to put it in the message box here. Via that link, you will be able to get to the page where you can find all the information about our trader funding program, where you can also enjoy a discount for a few days. That is it for the trailers. Now let's dive into what's happened yesterday overnight. Let's start with the, call it minor, maybe headline first. We had a bit of a speech with McLem speaking yesterday. There's a bit of a powwow going on in Mexico, where McLem was there. Bank of England's man as well was speaking yesterday. But McLem said that they will not review the 2% inflation target right now. So that's a bit of an indication, because there were expectations that they would do a review to see whether their inflation targets were still up to date, but they decided to leave them or everything as is. We do know, though, that all of them, Fed included, are observing some flexibility around those targets as well. But in the big lines, in the big scheme of things, they are keeping their target unchanged. Man, then yesterday she was talking, well, really both ends of the spectrum, because she first of all said that her upside risk inflation scenario is playing out, and that inflation persistence implies a significant tighter path for policy than it's embedded within the current market curve. Obviously, the gilt yields are on the up globally along the curve. But then she also spoke about the potential for weaker growth, and that she stands ready for larger, more forceful cuts should the risk to the economy materialize. So we got a little bit of both there, but really the sterling market is really looking at also a higher yield curve right now. Yesterday, as everybody on FinTweet was eager to put up, saying that the long end was trading at levels not seen since 1998. By the way, we have been there already a week or a couple of weeks ago, so not really fresh news, but just know that the yields in the UK are remaining extremely high right now. Right. and then we are slowly moving over to what's happening on the. No, let's stick with Ukraine first of all. There's been again, we are nowhere closer to a real deal between Ukraine and Russia because there's been really fierce attacks again from Russia, especially into Ukraine overnight. So that is not. That is not going any better right now. Trump was also commenting on the situation over there, um, saying yesterday that the U.S. is selling tremendous amounts of equipment to NATO. Um, Adding that although they are still very much involved, Trump is still very much involved with stopping the war in Ukraine, he will no longer be involved in funding Ukraine. But then, in addition, and later on, there was some additional comments saying that the U.S. administration is weighing the possibility of being involved in intelligence gathering, battlefield oversight, also take part, perhaps take part in a European-led air defense shield for Ukraine. So it's still up in the air, but where there won't be any direct funding, it does seem that the US will still be very involved in anything that goes on in Ukraine. Let's say beyond what could happen on potential meetings, etc. Zelensky wasn't actually very optimistic about meetings anytime soon. Just a few hours ago. Um, on the trade side of things, Akazawa is supposed to visit the Washington again, but where it was supposed to be this week. Now it is not decided yet when he will, in fact, fly over to Washington, where Trump yesterday said, specifically again on one of his famous posts, that the deals with the EU, Japan, and Korea are done. Well, from the EU side, that seems all nice and well, but from the Japanese side, they are still scrambling to know exactly what is going on. And regarding this trade again, we just had um, an article out in Bloomberg saying that the European Union is now really seeking to remove those tariffs this week, actually, to meet Trump demands. And the tariffs are especially on industrial goods, um, certain seafood, agricultural goods, but also, oh, actually, the duties on the automobile sector, but the famous digital tax has not been really mentioned in there. So there could still be a bit of friction coming from there, but at least it is a potentially decent news for both sides on both sides of the Atlantic. But again, as we also heard already from the German association saying that the Chamber of Industry and Commerce in Germany, which is the organism that really comprises most of the German firms, is saying that they still want a clear strategy from the EU, even if it could impact their business. So they are still wanting to be more on the hard line of things. So the story is not completely ending just yet. What else do we have? Did I have anything else on trade? Not really right now. So moving over to a couple of other things on this side of the Atlantic then. As we know, there is stress in the French political scene. Nothing new there, of course, but we know that there is a vote of confidence coming for the French Prime Minister. In the meantime, the finance minister Lombard came out yesterday saying that if they don't do anything really rapidly about their national debt, there could be some risk that France will need the IMF to intervene. sooner or later, and that is not really a very good situation for France to find itself in. Nobody really wants a bailout, especially not the second country of such a big bloc like the EU. And when we look at how the euro crosses have been moving over the past couple of sessions, they really are suffering under the weight of this French political uncertainty. And really, if that IMF involvement or potential involvement would get legs, it's probably going to continue to weigh on the euro crosses for a while. Um, Moving on. Can I straight away go? No, the last one on the tariffs is yesterday, but okay, India knows already that they are really under pressure from the US, but Trump decided to slap another 25% onto India, which is now de facto the 50% that were already rumored as they continue to buy the Russian oil, and I think that's been enough for the trade situations left, right, and center. Okay, let's go on to what people are talking about in the US, and that is, of course, the potential door shown to the Fed's cook. Her lawyers are going to, of course, fight this decision in court. It could last months, as we know. It could be that the Supreme Court of the US is also getting involved, which would delay things potentially even more. Um, but even apart from that situation, there's something else that happened yesterday, and now the Trump team is weighing options to extend their influence to Fed banks, which would obviously completely erode the confidence that investors, or at least partially erode the confidence that investors may have in the U.S. Federal Reserve, the FOMC, and with everything that brings with it. If that would materialize, and they would specifically, we have to know that there are some people at the FOMC, which are not chosen by the White House or the Senate. They are being put in place by other means. I think there's five of them or so, if I read that correctly. But now they want to have oversight over the Federal Reserve's 12 regional banks who actually propose or nominate those people to get an FOMC seat. It really is not great for financial markets, in my opinion, if that would come to fruition, because then the the lines between the Fed, FOMC, and Trump's administration will be completely blurred, and who knows what is going to happen then. Um, if that would really come to happen, and we don't see it really apart from those short-term blips in the market. We don't see that materialize now really acutely right now. But it's something that if it would come to fruition, I would say be careful with what happens to the dollar in that case, because if investors lose more confidence in the dollar, it could really be damaging for the currency. So that is a story which we really need to follow very closely. We know about all those pressures. We know that Myron, for instance, was said that he could actually take up a longer term assignment at the FOMC to replace Cook. The Senate is readying to do his for his hearings next week. So really, we need to pay very close attention to what is going to happen over there. Okay. What else did I note here? Oh yeah, we had a bit of an ONS. We had a bit of an ONS report on PPI numbers in the UK. So they said that the June 2025 PPI output was estimated to be at 1.9%. The input prices were estimated at -1% for the year on year. So they finally came up with a set of numbers. They also said, funnily, or maybe not that funny, that they hope to get their act together for October again to produce more numbers. But in the meantime, they produced that PPI number, which had absolutely zero impact on what is happening in the markets right now. Right, over to the data. Yesterday, we had a bit of housing data there. Nothing hugely away from expectations. We had those better than expected durable goods, but as they came out, it also, as I was mentioning already a good few times, that they don't really have moved the needle for a very long time. It did not really impact the markets either. The consumer confidence was holding up very well, and even the revised came out at 98.7, where the prior number, as you can see here, was produced at 97.2. So the consumer in August is still showing pretty decent resilience. That is an interesting one to follow as well, because obviously the Fed has a close eye on all things consumer. Okay, Richmond Manufacturing Index coming in a little bit better than the prior one. Services Index ticking up a little bit, but again, it was not really impacting the market, although we saw, but I think that was rather more technical as well. We saw the dollar um, just holding in its ground afterwards. We had a pretty decent 2-year auction yesterday, not unexpected when we see how the curve is behaving right now. There's a bit of pressure on the short end yields, especially on the 2-year. So that came in with I think the win issued was somewhere around 365. So that's a pretty good auction there. Just keeping the pressure on those short end yields. I may actually have a look at the yields today, because there's something to say about those yields. Then we had the Australian weighted mean, one of those inflation data coming out in the Aussie, ramped higher to 2.8% in July. We had a quick blip there on the Aussie, but again, some of those levels are capping right now in all those dollar pairs. Yeah, Chinese industrial product profit, sorry, not really yet improving. Although again, there very little impact on the Chinese yuan overnight. Next, then, the German consumer climate. I cannot, dare I say, expecting still, because the German situation overall is not really great right now. The companies are moaning. The US EU trade deal isn't for their likings. The consumer is not doing great either in Germany yet. So whatever green shoots we may have seen over the past few data points, reality comes to bite back here relatively quickly. Um, I don't understand this this unemployment rate in Norway improving by a full percentage point on a month-on-month basis. Maybe I haven't looked at the details, so maybe there's some seasonal jobs in there. But it didn't really have too much of an impact on the Norwegian kroner. And then this one was a big laugh. Swiss zoo expectations. So those are the economic expectations in August, where we had, and I need to look at those data just in if I see the chart, because that came in. We had already one of those so in April. But that came in after we just had above waters 2.4 number on the index, came in at minus 53.8. we are back at numbers not seen, well, apart from this April severe drop, not seen since we came out of the pandemic in 2022, 2023. If you look for moves in the Swiss, look very closely and have your magnifying glass because it didn't impact anything. We just quick word there now on where we are and what we are trading now. Just remember that over the past months really, with the odd exception where it did not really materialize, but we haven't seen any Swiss selling. We have seen most of the time month end Swiss buying over the past months, like maybe year even. So be a bit careful with the Swiss moves on any at any other time or with any other country. This such kind of numbers would send the currency absolutely spiraling lower. But the Swiss is one of those how shall I say, special currencies, miserable currencies, if you ask me, to trade. So I would not particularly trade on the back of it right now, but just keep an eye on what's happening with the Swiss franc perhaps going into Friday or even tomorrow, the last day, the day before last of the month. Keep an eye on what's happening with the Swiss then. If we see another leg of Swiss buying that may be giving us a bit of an opportunity there. But really, I wouldn't advise to really trade it right now. What is happening next? We have this CBI distributive trade survey, also a miserable bunch. Haven't seen that positive for as long as I can remember. There's a few more housing data out, mortgage applications, that's a weekly data point, have not really moved the needle too much either. But as I was saying on yesterday's show as well, um, there are a few people that I read starting to look at what's happening in the housing market, and it's just something that I'm starting to keep a very very small eye on. It is not really on top of my list of main indicators or so, but it may going forward into maybe the latter part of the year, getting a bit more important. But for the time being, just put it on the stove and let it simmer for a bit. The oils, what have we seen yesterday? The API had a bit of a draw, small one, but it didn't really impact oil. We have seen yesterday a big rejection of the day before, actually, a big rejection of the 65 level in WTI, and it does still look like oil is trading on the weaker side of things. We do have another auction today. It's the 5-year auction, so that may give us a bit of give us a bit of a move later on today. And tomorrow morning before the next flow show, bit of Kiwi data, minor Aussie. We have Bank of Japan board, Nakagawa speaking, but not sure if he's going to give us too much news. And Swiss GDP, and that is, oh, here we do have consumer confidence in the EU coming out yesterday. I'm not sure whether that is already a final one or just the plain number there. But that's coming out before tomorrow's flow show. Okay, now what has happened and what is happening in markets, and just going to repeat here what I said a few minutes ago. We are in the uh, in the month end environment right now. Okay, before obviously there's a lot going on: politics, trade, geopolitics in all corners of the world, especially on either side of the Atlantic. That has played a role in the euro dollar. But again, we are month end, and we know what we are trading value date month end. It's not an obvious move that we see every month, but just know that sometimes month end the US corporates may have a bit of dollar buying or dollar shopping to do, which may accentuate this move that we have seen on in the euro dollar, which is both technical and as I said, politically loaded up to now. As I said, we went back to the middle point of the range, which was the intraday resistance yesterday. That capped, and we started to come off, and especially euro crosses as well are well, where they were relatively big before. If you look at stuff like euro sterling, euro yen, even euro Aussie, that we have seen ramping higher over the over the sessions prior. Um, the euro now has lost steam. Yeah, Ali, I see your comment on the Swiss. I'll come back to it on it for and I'll show it on the Swiss picture for you. But we have seen the euro getting heavy, and this morning it went from heavy to heavier. And even though, well, we had that little blip back up when the EU when that article came out saying that the EU is going to do something about their tariffs to the US. We had this little blip higher, but clearly we have been on a bit of a move lower. We just trading below it right now. We've broken this triangle support. We did go for a bit of a run under 115.80 as well. Probably get some stops out of the way. So what's going to happen? It will depend a bit on those US corporates, I think. If they really show up, could be that we are going to find that lower, but it's all conditional, right? If they show up or not. As I said on my morning update, 115.60 is possible right now. 115 and a quarter already a bit stretched, perhaps I would say, unless they really have a lot to do. But where euro dollar could remain a little more offered, I would say, even though I think perhaps after the 4 p.m. London fixing, we may see something like this happening. There may be other pairs which are looking much better, and one of them is cable, because we've seen euro sterling coming or leaking back down. And yesterday, I told you that my expected first range of the day would be somewhere 134.2090. Well, he just moved up what, a couple of pips above there, and then came back as well on the dollar being better bit, but we're still in the range. So depending on what we see this afternoon develop in the US, in the assumption that we would have a bit more dollar buying going on, we could see a bit of a move lower here. But anywhere, if we would see it here, I think cable would be a better candidate perhaps to counter trade. And I say counter trade because I still think this situation that we have now with the US administration really firing heavy or throwing heavy loads onto the Fed, etc. I can't see this having a long-lasting positive dollar effect. And when I talk about a long-lasting dollar effect, I'm seeing some people. Do you see the top end of my screen here, where it shows the US 2 years and the US 10 years here as well? Just let me know if you see that top end as well of my screen. Do you see that here? Those yields? Okay. So we have seen a widening of a steepening, as we say, of the curve. So I'm just going to give you a reason why I think that if we see a lower cable here, we may start to counter trade it. And I'm seeing, and it is a bit of a mechanical effect, that if the US curve steepens, and we are seeing it actually on the dollar yen happening right now as well, if the US curve steepens, it has a kind of mechanical or psychological effect on the dollar, for that the market or some participants think that it's dollar positive. This is a bear steepening widening of the curve, meaning that steepening means that a bear steepening means that it's bearish. No, sorry, it's a bull steepening picture. Sorry about the mix-up. I was already running my own IDs here. So it's a bull steepener, which means that the short end is yields are coming down faster than the long end is coming down. Actually, the long end is completely stuck. A steepener can have this effect of a stronger dollar, but as we were talking about in the room this morning, it would be much more positive for the dollar if it would be a bear steepener. That is, with the bonds coming down a bit, which means that both here, those yields would go higher instead of the 2-year coming down and the 10-year stuck. It would be a lot more bullish on the dollar if the 2 years would actually rise and the 10 years go a lot faster. Okay, so there is some mechanical effect in this, and I hope I haven't lost everybody with this, but it is not the kind of steepening effect. I think it's a steepening effect for the wrong reasons. That is the pressure on the Fed and the long end staying higher is those pressures on inflation. For me, personally, that is still in the end going to be a more negative effect or potential negative effect for confidence levels in the dollar. All right. Okay. So that's one of the reasons why I think that if we see more activity to the downside today, I think the cable may find support lower down. And the dollar yen is pushing. It's really pushing through now. The reason as well is that those yen crosses, they still refusing to go down. So yes, we have seen all that demand here in the low 147s on the dollar yen. Even every time we get down there, this was the last move on Friday, but every time and even then we rallied, but every time we went down there, yesterday as well, down to low 147s on the dollar yen, we started to spike higher. I also think it's a factor of this curve steepening. But it's also a factor of the yen pairs remaining bit on dips, which could be due to equity markets still behaving better. Okay, that is also if you look at the S&P, if you look at the Dow, if you look at the Russell, they're still doing quite well in the US, and that may support here the dollar yen as well. We're actually trading above 148. I would be a bit cautious if this thing starts to move above 148, 1540. Then we may be relatively quickly back at this 148 3/4 figure if it would happen over the course of the day. I'm staying out of the dollar yen. If I do anything, it will rather be a cross yen, because I'd say it's going to go there, but I really don't want to go and chase too much of this either. I must say. Another one that I find maybe more interesting today is the Aussie. Yes, again, as I said, CPI, it took it over 65, and again, it failed above 65. This is really going to have to get above 65 and finally hold it, okay, for to push higher, but not specifically due to inflation, because I think that is often the wrong reason to buy a currency, but also in the global context of things. If we see a drop down, there may be a little bit of a stop run if we get below 64.5 here. So be a bit careful for that. 64, 40, 50, we may see a bit of a stop run if we get down there. But again, if we never get into this zone here, it could just be enough on the day. That is my feeling that I have right now, because I still don't want to give up on my bias that whatever this going on in the States is not really specifically for my liking. And perhaps these are things, if we get into the 4 p.m. London fixing and they trade on their lows, to pay just close attention to what is happening on those pairs. Okay. Um, what else? I know that people are watching the dollar mix very closely. It is pushing higher. Okay, we are back above 1870, back above this little 38.2 here, and finally seemingly pushing a bit through. Globally speaking, the EM currencies are, the dollar is pushing a bit higher, so there is a potential here to go and have a look, in my opinion. Maybe just around this where is it, 1880 or so, which is a bit of a traffic zone. Not well, it's a bit of a shorter term one, so okay, the levels are a bit closer, but the main one is still going to be here. Look at, it's the opposite side of the dollar, but look at what happened a number of times. Every time we went above this 84, 85 zone, spike above, spike above, spike above, and then we start to come down again. So be a bit careful if ever we do another, which is not that far away actually. It's only 0.5% away, which could easily be done in a day's session on the Mexican peso. Um, so keep an eye, keep a close eye on if ever we get back to that 84, 85-ish, and we get a bit of a spike, whether it is a lasting one or not. Obviously, 19 above will be a big level as well, and that's on the longer term time frames. It's very visible too. And as I said, it's a global thing. Dollar rand as well has been pushing through, and we are very close now to the prior top, which is right somewhere. Oh, it's like virtually only 100 pips above where we are now. We could go for a little bit of a walk if the dollar continues to do well over the course of the day, at least for the next five-ish hours. Yeah, I wouldn't rule it out that we go for a wander above and get 1780, 1783 or so. I'm not in that. I am still in my rand mix, which is just slipping and sliding lower. So I wanted to avoid any dollar risk in any of those two. So I'm rather in this one. It's very exotic, I know, but it is slipping and sliding nicely right now. What I mean, Ali, by the Swiss being bought every month end, if you go onto your chart, okay, just look at Euro Swiss, look at the dollar Swiss, what it's done over all the month ends, and you can see here again, just going back into July, what happened towards the end of July, Swiss being bought, okay. Let's just go over on the longer term, okay. If you look at only what happened, like look at 2024, big drop. Of course, this is the famous large dollar drop, but even so, month end Swiss is bought, month end Swiss is bought. You move into, this is one of the exceptions here, November last year, but then if you go into end of November, Swiss is bought. If you go into end of the February, Swiss is bought, and then it returns, and then it turns. Okay, you go into end of March, Swiss was also bought, and you can just overlay it. It's been going on for a long time that the Swiss is seeing. I've already spoken about that, Ali. The reason for it is also that we saw BIS numbers, and even though the amounts are very small, central banks have been upping their part of Swiss in their FX reserves. But it's not only that reason. Swiss is also still a safe haven currency. I don't see any other reason for that for Swiss to be strong, really. In their rates are at zero, their economy is not really doing very well. But it's just something that happens in what we have seen over the past literally 2 years. I remember September 2023 that we had like a big move down as well in all things Swiss. Well, buyers of Swiss, of course. Quick look on the S&P, we're still at the same levels. To me, still needs to get back down below, call it 63.70, 63.5 before we can talk about a reversal. Otherwise, this is still, it's banging its head against the high end, but it's not giving it up. Okay, so I think in the more medium term, we still need to see the first of a really retracement on the equity markets. I'm still not going to stand in front of it right now. Last one, silver and gold, and actually we just seen a bit of a retracement here in gold. As I was saying this morning, we are trading in a if you look at that, it's big, okay? But we've had this move up. It's fading away a little bit right now. We are like in this 20-25 bucks up and down. I think it may continue even perhaps this afternoon, see a little bit of an additional move down. But as I said yesterday, still thinking that this is positive, still thinking that perhaps into month end, into Friday or so, we could continue to push through. Okay, therefore I think the condition 33.70, 70.73 is a bit close for comfort, but I think the first condition would be that any retracement holds these lows here. Okay, anywhere between 33.50 and 60. If we can find a base there after this move higher, I think it still looks quite constructive. Silver is a different animal. I said it yesterday. There may be need for more consolidation. There's a lack of good news, I think, and also the move. Silver sometimes moves a bit faster. When the dollar is beat, it moves a bit faster. It is exactly doing this, and also when things are, think about that U.S. administration involvement in all things Federal Reserve, uncertainty of who's going to be sacked and who is going to come on board, is a lack of good news here. Also, if you look at economic data, for instance, in Europe or in China or whatever, there's a lack of good news, and silvers really need good news to continue to go. Long term, nothing changed. It's still very bullish, but I would be cautious. This could actually correct a bit more, I would say. Whether it's here to the trend line, 37.80, 37.90, possible. Could even go back down there to 37.30, and why not a bit lower here before this whole thing is over. It all depends. We have seen those setbacks in silver, right? Like pretty sharp ones as well. I just say it's possible. I'm not calling for it. I'm not adding right now to my longs. That is really what I mean. I actually took my bid out here this morning because I'm just not sure on what to think and make of this. But could also be one where we see a bit of a move lower and then start to move up again. But for the time being, I'd rather see this happen in something like gold than specifically silver. Voila, I'm at the end of today's flow show. I hope I have helped you a little bit on the way for today's trading. So don't forget, apart from all headlines, etc., we are watching the clock as we are in month end right now. Okay, so have a good day, and we talk to each other again tomorrow. Thank you for being with me.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.